David was on Market Call just about a year ago exactly, and he selected these three here: Brookfield Asset Management, Dundee REIT, and you also had a big position in cash. Well, fair size, I guess, for you back then. And let's remember that back then Europe was kind of in trouble once again. But let's focus on Brookfield Asset Management. You're out of this. Why is that?
Well, look, we've had a lot of exposure for 3 years now to real assets that generate cash flow, and I think Brookfield is a great example of that. Of course, they've got their real estate, they've got their power production, they've got renewable power, and basically it's an asset management business in the business of owning real assets. I think that it's a very powerful business model. Now, we have been steadily moving our asset base for our clients from Canada to the U.S., so we own more by way of U.S. REITs and U.S. cash flow producing assets. But I continue to think that it's a very compelling investment. So long as they continue to execute, they've got great assets and it's a pretty predictable cash flow.
And there's a distinct possibility you may revisit this at some point?
This is certainly one that we could own. Mm-hmm. We just happen to think in general there's more opportunity in the U.S. stock market than there is in the Canadian stock market.
All right, and two of David's top three top picks today are in the U.S., and we'll get to those right now.
Top Picks is brought to you by Questrade, where you can trade stocks for $4.95.
David Burrows has been gracing us with his presence here and is Insight President and Chief Investment Strategist at Barometer Capital Management. Interpipeline Fund, IPL.UN. You last bought this in May at about 24 or so.
Yeah, so this is a company, and I hesitated using it today because we've talked about it so many times over the last 3 or 4 years. But this is, a great example of owning energy infrastructure. Of course, they provide a lot of pipeline capacity around the oil sands. They move distillate to the oil sands and help move bitumen out. This industry is one that has very good volume growth in front of it. They have a number of projects that they're continuing to build, so they've been getting very steady dividend and distribution increases. That's going to continue. Recently, the last couple of days, when there's an announcement that they're going to restructure it into a corporation over the course of the year, which opens up the shareholder base to U.S. investors. They are going to internalize the management contract of the assets, which will, in simple terms, make it a simpler corporate structure and will enable them to grow the distributions just a little bit faster. So over the long term, we think that the energy infrastructure industry is one that is capacity constrained. They have pricing power. And, like virtually everything else in our income advantage fund, if I can get a 4 or 5% yield and get dividend growth of 5 to 7% a year in a very predictable way, I think it's a great investment.
Very good. Next up is Wells Fargo. You bought this just a few days ago, most recently, WFC, just under $49. Was that you've had this for a while, I guess?
This is one we've had for a while. We just keep adding to. Wells Fargo is one of those banks that came through the crisis very well. They've rebuilt their capital. They were held back on dividend increases. They're paying out only about 27% of their earnings in dividends. That could go to 40% over the next few years. It's a play on a slowly recovering U.S. housing market. They're the largest originator of mortgages. And it's also a play on commercial lending, which is also showing double-digit growth in the U.S. So we think that on the margin, U.S. banks are getting a little better, while the Canadian banks are getting a little bit less attractive. Valuations can go higher.
And Wells Fargo near an all-time high. And lastly, Merck, MRK. This is a top pick of David's today. You bought this most recently in May at just under 41.
Yeah, this is a group that we've been invested in for the last 18 months. The pharmaceutical sector is one that was way out of favor for 12 or 13 years. Recently, what made it unattractive has made it very attractive. Predictable cash flows. They've got about a 25% profit margin in the business. It pays out about a 4% yield. They're paying about 50% of their earnings out, so that can go higher. And recently, they've been having good success in science. They've had some compounds doing very well for melanoma, which could add some value to the company.
Right. I believe there was some news yesterday. They're going to pursue stage 3 trials, late stage trials.
That's right.
Yeah. All right, we'll wrap it up there. Merck, Wells Fargo, Interpipeline. Those are David Burrows' top picks tonight. Great to see you today. I'll be on tonight as well, too. Just a little bit delirious here doing the afternoon show. Just joking. All right, we'll take a short break here, and we'll be back with more great programming on BNN. I'll be hosting the close for Michael Hainsworth later and Market Call tonight, so stick around for that. And thanks for joining us. We'll see you next time.